Just a few minutes on Mad Money, Cramer's exclusive interview with Chipotle CEO Brian Niccol. Here's a sneak peek.
We're doing everything we can to avoid having to pass on pricing, but it's getting harder and harder. Here's an interesting fact, Jim. Just in the last 18 months, if you look at what our food costs have been over the last 10 years, they're up like 10 points. 50% of that increase has happened in the last 18 months.
All right, well, Chipotle shares are moving higher after an earnings beat after the bell. Kate Rogers has been digging into the numbers here. Kate?
Melissa, Chipotle out with beats on the top and bottom lines for Q1. Same-store sales also up 9%. That was a beat as well. Restaurant operating margin a bit below estimates in the face of cost pressures, as you just heard, with food, beverage, and packaging costs coming in a bit higher than had been projected. Those strong sales helping to offset partially those higher costs in the quarter for beef, avocados, and more. CEO Brian Niccol saying there's been very little resistance to price hikes so far from consumers, which were up about 4% in the quarter, up about 10% year on year. In-restaurant sales increased 33.1%, while digital sales represented about 42% of food and beverage revenue. The brand's loyalty program, Chipotle Rewards, now has 28 million members. For the second quarter, the company is projecting comps to increase between 10 and 12%, also better than projected. Niccol also touting new menu item, pollo asada, as the most popular new protein that they have had to date. Back over to you.
All right, Kate, thank you. Kate Rogers. I love how they just put something on the menu, and it's been something that's well-known.
What's the big deal? What's the big deal? I'm not that impressed.
After hours, the stock is up 3.5%, which in the context of the market guy is a burrito blowout.
Well, we had to do that.
Well, it's always a burrito blowout. And this, again, another solid quarter. They beat on EPS, beat on revenue. As, again, Kate mentioned operating margins. For context, 20.7% this quarter. Same quarter last year, 22.3%. Not a disaster. They're going to talk about 30% EPS growth for a company trading at about 35 times-ish next year's numbers. I happen to think you can make a pretty compelling case for that. I think the high on the street is 2,100, significantly lower, obviously, than the recent all-time high. You know I love the company. You know I love the stock. It's just a question of, were people comfortable with the valuation in this environment? They should be, because they're doing everything right.
I actually had a higher valuation in the low 40s as a PE. It's interesting to me that a miss on the margin, even in a great quarter for sure, they weren't penalized. Even with a really high-flying stock,
right,
it seemed to be immune to some of the other reactions.
The stock's always immune.
Usually they beat on every metric. I mean, this was an outstanding quarter, no question.
But a 10 to 12% comp coming off a 9, which beat an 8, I mean, these are crazy numbers. And you think about a world where at some point food prices are going to be coming down. And to the extent that they have some pricing power, and I realize we don't all expect that in the next couple months, but they have pricing power. He said that. Clearly, for now, people are going back into stores, although digital sales, I think, are still 49% of the overall sales, which is why the stock gets the multiple it gets.
Who else in food, Grasso, has pricing power like CMG?
Well, what I was going to say is to Tim's point, Guy's point, when you say you have pricing power right now, they're trying not to pass on price increases, but that doesn't mean that they're not going to pass on price increases. So if you look at the burrito blowout that you called it, it's still trapped under all of its moving averages. If you look at the chart doesn't look so great to me. It's still down 17% year to date. The nearest moving average is the 50-day at 15.25. So if you want to really talk about pricing power, I would probably go down a little on the food chain and on pricing, and I would go to McDonald's. McDonald's is only down 7%. But if the consumer becomes a little more strapped as we're moving forward in this environment, as we start to move maybe into a recession, I think you go with McDonald's.